yeah, it have been a bit slow week up to now. Eurodollar is ranging from the 106,900 to the bottom of 106, so 900 points, 90 pips, ranging during this this week so far. We do have some PMIs coming from Europe in 55 minutes, and this will definitely shake the market a little bit with the results. And this is one of the things I want to talk today as well here on the live. You know, we have it in 53 minutes, sorry, not 55, 53 minutes. We have manufacturing PMI as well as services PMI coming from Europe for the month of April. So Eurodollar is moving a bit now. It has moved today 23 here. So it has moved today already 0.10% down as we're speaking. Euro pound is up. That's strange, but we are moving. All right. Okay, so let's go over. Yesterday we didn't have anything. Right, we didn't have actually anything. If we look at the yesterday economic calendar, we only had new housing prices index for Canada, and that was only it. So pretty much nothing. All right. Today we had the Bank of Japan core CPI that came in at sorry. Came in at lower than the previous. Previous were 3.3%. The actual is 2.2%. So it came 0.2%, sorry, 0.1% less than the last year. So remembering that this is a year-over-year inflation rate. Okay. Now, we have in 7 minutes France manufacturing PMI and services PMI as well. So today, you can take as a PMI day. Okay, so we're going to have services, we're going to have manufacturing PMIs, even from US. All right, and this is where I'm looking at the big shake on the market. We can expect a bit of shake on the market coming from in a few hours. All right, today. I still bearish on Eurodollar. All right, this is my take, my personal opinion. I've been mentioning these on the podcast. I've been mentioning these on the YouTube videos every day. I've been mentioning these on the Telegram channel as well. So, you know, it looks, everyone thinking that the US dollar have come to an end. So let's just come here to the US dollar index and have a look on this downtrend. All right. Sorry, on this chart, we can see that, yes, we did had a sort of, all right, a downtrend that everyone, oh, okay, this is a downtrend. No, it's not. It's just a pullback, as a normal market would do. All right. The market has ups and downs. It goes ups, it comes back, and it's completely fine. All right. We need to understand that the market doesn't go only one way in one direction for 100 times. All right. The whole year. There is maybe a pullback, even if it's like little pullback, it will be in there. Okay. But all right, let's come back for the economic calendar here. So we have 5 minutes French services and manufacturing PMI. We have German manufacturing and services PMI as well. Very important, all right, because German holds a big portion of Europe, as well as it's a big manufacturing country, and it does exports a lot of the big technologies, all right, big industries. Volkswagen, BMW, Porsche, and all of the other big brands. I'm just citing here car brands, but of course there's much more involved on German that actually builds the technology from there and then outsource it from other countries. So the manufacturing wise, I'm expecting to be higher than the previous. Okay, the previous was 41.9. The consensus to April is at 42.8. Same for the services. Services is 50.1 on the previous, and the consensus for April is at 50.6. So 0.5% higher than the previous. Okay, so let's see how this will come. Now, then we're going to have Eurozone manufacturing PMI as well. Services PMI, will be the big move for Eurodollar, as well as Euro Pound, Euro Yen, and others. I'm expecting it to be lower than what is the consensus, okay? And why I'm looking through these is basically if we come to the ECB, European Central Bank, let me just, okay, this one here. If we come to this, website, I'm going to share the link on the chat so you guys can come with me if you want it. And then you scroll down here to monetary policy decisions, click on there, come back to this page. You will have the monetary policy decisions. You can click on press release, and then we open this page from 11 of April 11 of this year. That was the last monetary policy decision that they had, and they held the rates on 25. Sorry, they held the rates. They didn't cut. They didn't do anything. But the interesting part is, of course, this is pretty good. You can have a read through this, but this is not complete. It's basically a summarized version, a very, very bad summarized version. To get the real insights, you should click on the monetary policy full statement, and then it will go to another page, and this is where the actual gold is. Okay. So if we scroll down to economic activity here, we can see that what they've said here, it's pretty much in line with what I'm expecting for the Eurozone PMIs. Okay, so let's have a look on economic activity here. So the economy remained weak in the first quarter, right? While spending on services, all right, so just pay attention to that. Spending on services is resilient. Okay, so let's divide my screen in two. Just a second. This one. So the services PMI is expected to come 0.3% higher than the previous. Okay, so we can see here, let me take my pen. So this is the previous 51.5, and this is what the market, the consensus, the forecast basically is expecting. All right, 51.8. Now, if we come back to the ECB website, we can see that they say, while spending on services is resilient, manufacturing firms are facing weaker demand and production is still subdued. So what does that pointing to us? That they are not expecting a huge move, let's say up move, a big numbers on the manufacturing PMI. So the manufacturing PMI, the past one was on 46.1, and now they're expecting 46.5. Look, there's two scenarios here. I can see the data actual coming in. All right, I can see coming as expected, or the risks are tilted to the downside. I've explained it already. What does that mean? Risk tilted to the downside. It basically means that it can come as expected, all right, but most likely it will come below expectation. All right, so if it's 46.5, let's say 46, let's say 46.4, 46.3, somewhere below the actual, okay, the forecast. Now, if it comes 46.1, it will basically show to us no changes from the previous to now, right? The previous month being March and now April. So if we just think, all right, 46.1 to 46.5, this is not a big change. There it comes. Manufacturing PMI for France came in at 44.5 from 46.9. And the services PMI came at 50.5, and 48.9 was the the consensus. So is exactly what the ECB is saying. Spending on services is resilient. Okay, we just saw it right now. The services PMI came in higher than expected. So this is a positive scenario for euro. But this was very bad, 44.9 compared to 46.9. So it's still a bearish trend for euro. Okay, of course, it does. It's much worse than the previous of 48.2, but this one was pretty good. The services PMI was pretty good. So we may see a bit of a retracement until we finish with the Eurozone actual coming in. So that's going to be very, very interesting to see. We're going to have German in a few minutes, in 30 minutes. That will be much stronger move than the France, I'm supposing. Anyway, so moving ahead. Service points to a gradual recovery over the course of this year, led by services. So again, they're making sure that's the third time in 4 lines they mentioned services are stronger. Okay. This recovery is expected to be supported by rising real incomes, resulting from lower inflation, increased wages, and improved terms of trade. In addition, the growth of euro area exports should pick up by over the coming quarters as the global economy recovers and spending shifts further towards tradables. Finally, monetary policy should exert less of drag. The unemployment rate is at its lowest level since the start of the euro. At the same time, the tightness in the labor market continues to gradually decline, with employers posting fewer jobs vacancies. All right, so this is pretty good in overall for euro. Okay, but just here on the manufacturing PMI, that I'm expecting it to come lower than what is actually mentioning. Let me come back to one screen. Okay, then we're going to have UK. Let me just check something here. We're going to have UK. Then we're going to have UK at 630 with manufacturing as well as services. No changes expected on manufacturing PMI and 0.1 less expected on services. Okay. And then we're going to have the big news at 11:45, manufacturing PMI and services PMI for US dollar. All right, this is going to be the big one, and definitely will move the market at least 1% or maybe 1.5%, maybe up, maybe down. I don't know, but I know it will be a pretty big move, as it always is on every month. Anyone have a question? No? Okay, cool. Now, if we look at the manufacturing terms of trade from USA, we can just type on Google US manufacturing PMI, and we can access the first page that comes to us. And we can choose this chart of line chart and put in the last 5 years. We can see that nothing, it's not looking too great. Okay, from 2022, well, half of 2021, mostly speaking, to beginning of 2022, year to date, we can see that we did had a big decline all the way from 64, 63, 64, now to 51. Okay, 52, let's say 52. So that's a big loss for US, all right, in manufacturing. But if we come back and look for the services, so USA services PMI, and we can access the first link as well. We can put both, combine it, and looked at how bad the services PMI is. It hasn't changed since 2022. It has been in the same range since 2022. Why? Simply because we're still getting affected by the COVID, all right? We're still getting affected by the pandemic sort of, all right, influence. We do have more jobs, but still services are not greater than it was before. So that makes me think, Is this actually real jobs being applied to the economy? Because all are USA line. Okay. The another thing is I've mentioned on Telegram. Okay. So if you're not on Telegram, I'm assuming here everyone is on Telegram, most probably. But if you look at the Telegram messages I've sent this week, let's just revise it here. So in the first image, all right, is the federal taxes revenue in orange line here, and the expenditures are in blue line. The middle thing here, we see that we have a difference between the blue and the orange line. This is the difference on the deficit, all right, of the country of the USA. And the bottom one here on the black line, it shows the taxes only cover 73% of the federal spending, and the remaining 27% they require to do new debt issuance. Okay. This other image here shows was that the annual federal expenditures amount is 6.24 trillion, or 22.3% of the US economy on the nominal GDP. Okay. It's similar to the deficit graph, but the only time that the government spent this amount as a percentage of the GDP was when it attempted to pull the economy off a recession. So wait a minute, are we on a recession? No, we're not. Technically speaking, we're not in a recession. Why? Because the GDP didn't came. I've explained this already, but if we look to USA GDP, we just access, where is this? Here, this link here. And then we'd look to the 1 year, 5 years, that should be fine. Line graph, look at this. It's just growing, okay? We didn't had any release below expected yet this year. Okay. So why are they spending so much money if they are not pulling off the country, let's say, on a recession? We are not even on a technical recession. So why are they worrying so much? Strange. All right, let's go. So the economy is in its 4th year of recovery since 2020. So they're still recovering. So that's what I want to show here. So we still recovering the whole economy from 2020, from the corona. All right, and this is why pretty much we're having low services. But manufacturing wise, we still produce. All right, we're still producing, but people are not willing too much to do services. So if we come back here to the economic calendar where it is, we can see that the services PMI is expected now to come at 0.3% higher. So, okay, now it's going to make sense to us. If both of them comes higher than expected, or, you know, a tick higher, let's say 0.1 higher, 0.2 higher, or maybe if it comes more than that, Eurodollar will do big moves. All right, will be very, very big moves, especially now that we're going to have the German manufacturing and services PMI. Anyway, so moving ahead on tomorrow, we will have Australia CPI. All right, so there was a misunderstanding here. Okay, so I think most of the economic calendars on Sunday, or even on Monday morning, they were displaying that the Australia CPI was going to be on Monday, but that was wrong. It's going to be on Wednesday. Okay, even if you come here to the RBA, you can check. Let me check RBA. This one here, you can check that is released to be released on Wednesday. All right, so now we're going to have the CPI year over year and quarter over quarter, quarter one, both of them are expected to be the forecast 3.4%, the CPI year over year, so lower than the previous. That's pretty good. Well, good for the economy, not good for the currency. And the quarter over quarter is expected to come at 0.8% from the previous of 0.6%. A bit of higher than expected, so mixed it from both of those releases. What time is it? We have 5 minutes yet. And then that's pretty much what we're going to have in the morning. Coming from the night, we're going to have retail sales and core retail sales for Canada, and we're going to have Macau speaking from the European Central Bank. On Thursday, will be public holiday in Australia, will be Anzac Day. Okay, so now that most of the people that always come here to the webinar is here, I will do the webinar. All right, so just making it very clear, we will continue to have, even though it's a public holiday here in Australia, it's the Anzac Day, I will do the webinar. So you can go to the website, register normally. I will send the link on the Telegram as usual. Okay, so don't worry, we will still have it. So that should be fine. But it will be a very, very important day for USA as well. So we do have services and manufacturing PMI tonight, and we're going to have the GDP quarter over quarter, quarter one this year for USA. Now, I've mentioned these a couple of times already, lots of times, to be honest. Let me just check here what is going on in the market. Okay, it's all good. So if we come to the federal market from the Fed, all right, and we go 2023, and we go July, and we come to the press conference. I'm going to send the link into, oh, sorry. We go, where is this statement? Projection materials here. HTML as well as the minutes on the HTML page. I'm going to send the link to you guys on the chat. Just a second. I think is this one, minutes. Yeah, that's the one. So you can access with me. And you scroll down all the way to staff review of the economic situation, as well as forecast. Where's the forecast? Staff economic outlook. This is the one. Right, so these two that I've just mentioned are the most important ones that you always have to look when the minutes come out. And this basically shows to us what are they expecting towards the economy. All right, let me just drink some water. Is everyone good? Any questions? All good to move on? Cool. All right, I'm just looking at the economic calendar because we do have the release soon. So let me put it in today in 1 minute. So let's see how German manufacturing and services will come. Now we still have 2 minutes. That should be fine. Let me close all of this. Let's go. Oh, see, US dollar is dropping. All right, let me check how much is this dropping. So in just now, it dropped 0.17%. Led because of the France better manufacturing PMI. Services PMI, sorry. Not manufacturing. Manufacturing came very bad. That's interesting. Okay, let's see what's the release of the German PMIs will be. Is the European news can usually affect gold prices? It depends. It will depend. I'm going to explain this in a second. All right, there it comes. $30. Oh, sorry, I'm not showing the chart. I thought I was showing the chart for you guys. Sorry. Okay, there we go. And it came in as spreads are widening. Oh, wow, it's not loading. It came in again. Manufacturing PMIs lower than expected, and the services PMI higher than expected. So this makes Eurodollar very, very strong as we just looking. Well, Euro strong. Feels like we are having a good Euro and a very bad US dollar at the moment. So if we come back to the US dollar index, we can see that it's dropping 0.23%, 27%. Wow, that was quick, 0.30 now. Most probably we'll come to these lows here at 106.746. But Eurodollar is pumping, all right, broken this high at this moment, as we can see just here. So that's very interesting to see. Okay, I wasn't expecting this to be as it is, but if this candle here, the 1 hour candle, closes above this high at 106,908, then Eurodollar may start a uptrend. Okay, maybe we will have to see how the market will react towards the services manufacturing PMI for USA as well. Okay, but feels like we are going to have a up move on Eurodollar. Interesting. I wasn't expecting that. But anyways, so moving ahead, as we can see here on the staff economic outlook, the economic forecast prepared by the staff for the June FOMC meeting continue to assume, this is in 2023, okay, guys, just making sure. The staff inflation forecast was little revised relative to the previous projection. And supply-demand imbalances in both goods markets and labor markets was still judged to be easing only slowly. On a 4-quarter change basis, total PCE price inflation was projected to be 3% this year in 2023, with core inflation at 3.7%. Core goods inflation was forecasted to move down further this year and then remains subdued. So here, core goods inflation was forecasted to move down further this year and then remain subdued. Housing services inflation was considered to have about peaked and was expected to move down over the rest of the year. Core housing spending, we don't need to read this, reflecting the effects of the easing in resource utilization over the projection. Core inflation was forecasted slowly through next year, but remain moderately above 2%. Okay, with expected declines in consumer energy prices and further moderation in food prices. Let me just manage my position here, guys. Just a second. Managing one of my positions. Okay, cool. That's a better price there. I'm trading Euro pound today, guys. There's a bit of a sweat there. I wasn't expecting to be as it is, but I guess it is what it is. Wow. Okay. So in 2025, both total and core PC price inflation were expected to be close to 2%. The staff continued to judge the uncertainty around the baseline projection was considerable and still viewed the risks as being influenced importantly by the potential macroeconomic implications of banking sector developments. Look, I don't know why they keep saying about the banking sector, because this, of course, this was in 2023, but I think the whole banking crisis, how do they say that? Liquidity default. Okay, that's how it's supposed to say. Liquidity default. It's over. All right, I think it's over. I don't think we will get any other bank going bankrupted as we had last year in 2023. Now, there is a possibility, of course, but I think most of the market is moving now, getting off from the risk and moving to a risk off. So like gold, iron, and some other commodities. And look, we can see here that gold did had a rally, a huge rally, all the way to 2,430-ish. So I think at 2002, 2,431, okay, to be very precise with you, all the way from 2,150. So that's pretty much 300 and something dollars in a month. Right? I'm talking in a month. I'm not talking in like years. I'm talking here in one straight month. So this made the market a lot of money. And those big players are taking off the money now. So they're liquidating those positions. They're getting off from those positions. And it's exactly what is happening with gold. Gold is going down as naturally the market is. I've just mentioned that. The market will never go always up or always down. It will always have a retracement. So just make sure, to use risk management when those things happen. Now, moving ahead, where is my economic calendar? Here. So I were on Thursday. So now we have Friday. So Friday, as on the GDP here, okay, I'm expecting to be higher. I forgot to mention that. I'm expecting to be higher than the forecast. More. Okay, I may be very aggressive towards my expectations, but what my models are saying is somewhere between 3.1 to 3.2% from this to 2.5. So I'm still bullish on US dollar. Okay, just making sure. It's my own view. All right, you guys don't have you don't need to follow me. I'm just saying here that what I think is that the GDP will continue to grow on US for the first quarter, and then second quarter, we will have a reduction on the numbers. Meaning that, yes, we will continue to have US dollar stronger for now, okay? And even though I was reading a Goldman Sachs interview today, and they were like, yeah, we have how did the guy say? We have revised it down our forecast. Well, we have revised it up our forecast on USA. Okay, so they still believe on a higher US dollar for this year. Therefore, lower Eurodollar, lower pound dollar, higher USD JPY, and so on. USD JPY can sound a bit tricky, but it does have a carry trade effect yet on the market. Okay, so let's have a look on USD JPY. It's very, very close to the first target I've mentioned, the 155. So that was my first target. Well, first target was 152. We got hit, all right? And then now it's 155. And then after that, it's all the way to 170, okay? Look, do I think it will come to 170? Well, there is always a possibility to go. But remember, guys, it won't happen to one day to another. Okay, the market needs to have those pullbacks. The market needs to come back, needs to revive the move. Otherwise, it's, don't believe on all those gurus out there. They say, okay, market will always go up. No, it won't. Anyways, let me close this. So 155 being my first target, it does have a correlation with how do I say that, with carry trading. Okay, so it's positive. Okay, it's a positive carry trade. Coming back to the economic calendar. Okay, Friday. Okay, Friday is a very, very important day for Japan. Because we're going to have the monetary policy statement as well as the interest rate decision and the press conference. Look, if you haven't watched yet the ACY cast I've done with Peter Pan, this one here, let me show you. YouTube, ACY. You can come here and watch this one here. Okay, it's a very nice, very interactive podcast. I would highly recommend you guys to watch it. As we talked about lots and lots of things. We've talked about USD/JPY. We've talked about everything. All right, gold, even gold. What are the projections for gold and so on? And if you watch it, Peter said, and this is 4 days ago. Okay, this is in Portuguese, but yeah, 4 days ago. Let me translate this. Translate to English. Yeah, 4 days ago. Okay, it says 4 days ago. Look, where gold were 4 days ago. 4 days ago, it were, let me put in the daily chart. 1, 2, 3, 4. So 4 they were here. Look, you know, that was a good trade. That was a good trade. Fantastically well done. Okay, so from here to here. So still, if you're not watching those podcasts, you're missing out a lot of information. Okay, so always remember, guys, put the bell here on. All right, turn it on the bell here, all, and then you should be fine. Okay, but yeah, we've talked about gold here, Bitcoin outlook. I think he's mentioned. Let me put a subtitle. Everyone, you've about the Fed, China, Bitcoin, gold. Finger or the topics. Could you like to say anything? Yeah, I just keep caution, even though you think the gold is have a big upside trend, it will crush maybe just in several weeks. So this is exactly what Peter Pan said, and it's happening. And if you haven't watched it, you've missed it. So these are just the things I want to help you guys. You have to help us as well. Subscribing to the channel, give us a thumbs up, and so on. Okay, it's enough. Talked about too much. Now we will have. Sorry. Are you talking to me? Sorry. Hello. No, no one talking. Okay, sorry. If you have any question, just send it on the chat then, because I couldn't hear your voice quite well. So is the European news can usually affect gold prices? It can and it cannot, because whatever affects the US dollar will affect gold prices. Okay, so if we come back here and looked at US dollar index, we can see that it did affect the US dollar and therefore affect the gold prices, but it doesn't affect too much. Okay, so let's put in the 50-minute chart so we can have a zoom in. Look, it didn't affect much. It was like very, very little. Okay, so this was when the release happened. Okay, guys, not this one. This one was this morning. So this is when the release happened. So no, it can't affect huge. No, it can't. Okay, not much. US dollar can affect much, much more the US gold prices. Okay, so this is when I think the big moves happen on the US dollar news. Okay, moving on. So I was talking about Peter Pan, right? Isn't he in the office? No, he's not in the office. I was talking about Peter Pan, about the CPI that we're expecting that came. You know, we never know what is gonna be because there's never a consensus there. And the consensus is like I can choose to change if I want. This is how Japan works. So very very hard to predict anything in there. But anyways, so as I was saying, it's going to be a very important day on Friday for the Bank of Japan because of the interest rates decision. Now, what me and Peter have discussed is most probably we won't have a hike now, but we will have a hike in July. Okay. And this is when all the market is expecting to have a hike. I'm just throwing some balls here, stress ball, because my trade on euro pound is kind of stressful. So this is when we will have some moves happening on the USD JPY. Okay. And then we're going to have core PC prices and PC price index for USA. And then we're going to have all normal Saturday, as always, CFTC release data. Okay. Now, moving on. What we can see on Aussie dollar. I think someone mentioned about Aussie CHF. No. Was it Aussie CHF? No, Aussie NZD. I can't remember. Maybe New Zealand dollar. Aussie JPY. No. Aussie dollar. CHF JPY. Maybe. I can't remember which one. No, someone mentioned about some pair last week. Let me see if it's on this chat. Aussie New Zealand. No, it wasn't. Yeah, can't remember. I think Aussie CHF. Oh yeah, there we go. See, this is exactly what I've mentioned. So this was the drawing from last week, and here was the target. We got hit the target perfectly. Perfect trade. Okay, very nice trade. So pretty simple trade as well. CHF Aussie was very weak. Still very weak, all right, compared to most of the currencies except the Japanese yen. So we have Aussie dollar falling, we have Aussie CAD falling, we have Euro Aussie going up, we have Aussie NZD going sideways, most probably, yeah. But yeah, it did went up pretty bad. Okay. So market is very bearish on the Aussie dollar. Okay. CHF JPY. Do you want me to do an analysis on CHF JPY? Is that what you want? Let's do it. Okay. First of all, I want to show some things here first, and then we move on. Let me just show you guys the commitments of traders. If my internet works. Just a second, guys. Let's come back here to the main tab. Okay. There we go. Okay, so let me go for the commitments of trader. So these are the positions held by the institutions. Okay. So let's have a look on here. What are the big boys doing? Okay. So still loading. Wow, why is so slow? That's not good. Why? Is it my Wi-Fi? No, there we go. Okay, so US dollar. Check out Euro pound. It seems to have broken out from a tight range on daily time frame. Mate, I'm trading Euro pound at the moment. It doesn't look good for me. I'm shorting it, but it's not good. Yeah. Yeah. Let's see. I didn't know Euro was stronger than the pound. I don't know why, but whatever. Let's see how we go. Okay. So coming back to the commitment of trader here, we have the US dollar being negative 40.9. The breakout occurred last week though. Yeah, occurred last week. Yeah. So 40.9 still negative. Long 42, shorts being 18. So it feels like they are building some positions. Okay. And it may happen to have stronger US dollars soon. Maybe. We don't know. Now, Canada, Can dollar, from negative 18.1 to negative 19. Japanese yen, negative 28 to negative 30. New Zealand dollar from 14 to 8.2, still positive. but not, well, that was a big change on the short position. So 23 to 24, 21 to 22, basically increased one to another. So that means that they have more short positions, stronger, more short positions. Okay. Let me see something here. Okay. Now moving on, CHF. From negative 2.1 to negative 2.5, still negative. Euro, no much changes on CHF. Euro from negative 3.3 to negative 5.3. See, that's interesting because the pound is positive, 8.3% positive. So that's very interesting. And the euro is negative. And then the Aussie dollar is from negative 14.6 to negative 10.5. Nice. Right. CHF JPY. Okay, let's have a look on here. These on the top here are all the pairs that correlates positively with the CHF JPY. We have Japanese, we have pound yen, euro yen, CAD yen, and US yen, US dollar yen. And the negatively correlated ones are Kiwi CHF, Aussie CHF, Euro CHF, and CAD CHF. Okay, so this is pretty handy too. Now let's have a look on the DXM. What is happening? Well, only 26.9% of the market is longed. You can have a look on these two, right, at the FinLogix website. So if you just type FinLogix as it is here, and then go to business, for business here, scroll down, wait a minute, scroll down to market sentiment here. You can choose to see what pair you want. So CHF JPY, and just wait to load. So that shouldn't be as it is. So it says 100% short. So you know what to do, right? I've explained this already. So we take the opposite. So if that says the majority, so let's say here, right? If the majority is short, we take the long positions. If the majority is long, we take the short positions. All right. It's just a very, very simple strategy. So looking at CHF JPY in terms of targets, I think the first target could be this one here on 17100. Let me put into a better number like this, 17100. That would be my first target, but remember we do have to break these tops here, those highs. As soon as we break it, it will be very quick to get up to 17100. And then from there, we see how we go. But yeah, that seems pretty good trade. We have some other highs here to be broken, and then we are free to go even higher, I would say. But at the moment, if we go to a lower time frame, 15 minutes, we can see clearly that the market is making higher highs. So break this high, make this high, make this low. Didn't broke the low, therefore it may come back and go up to the target at 171. Right there. Okay. So somewhere between those lines, we'll break these. So even a minor trend would be here to here, break, continuation up to this area. Okay, so yeah, CHF JPY looks good for me. It's good opportunities. If it breaks down here, then we would have to reevaluate the trade. Okay, this is it for today. Stay tuned on the ACY YouTube channel. And bring your friends on Thursday, guys. Bring your friends, send the link to them so they can join. Yeah, that's a nice drawing. So everyone can learn and share the knowledge. All right. So have a great week ahead. And if you have any questions, you know where to find me. Just send me a message on Telegram. All right, guys. See you.